Hello, and welcome to another episode of the Real Estate Investing Club, the place investors go to learn tips, tricks, and stories from other investors in the field. If you feel we provide value to you, go ahead and hit that thumbs up, share whatever it may be, and if you'd like for us to cover a specific topic, let us know in the comments or reach out to us through our website. Today we have a very special guest, so buckle up, grab your pen and paper, and enjoy the ride. All right, we are live. Jerilyn, thank you very much for joining us today. How you doing?
I'm doing great. Thank you so much for asking me to join you because I love real estate investment. And I was actually, as I was discussing with you earlier, I was looking for a conduit to actually have conversations with investors because I've been doing this for 22 years and I've owned my own company for 8 years. And I'm up to 45 agents. So I'm seeing a lot of investors coming to the Florida market, and I see a lot of the same errors in judgment. And I just thought it would be great if I could have an opportunity to discuss what I feel is the most important part about real estate investing. So I'm really glad that you invited me because it gives me a conduit to get it all out, and to an audience that is emotionally and financially invested in this form of passive and additional income stream.
Perfect. I love it. Well, I'm excited to get into this. To get us started, though, why don't you tell everybody, who you are, where you're from, and how you got started in real estate in the first place?
Well, my name is Jerilyn Walters, and I'm originally from Southern California. I came out to Florida to marry my fiance at the time, and he left me here and went back to California, and I had to come up with a vocation. And that happened about 22 years ago. So I thought, I'm in a discretionary dollar market. So I had to come up with some type of a vocation. And when you're in a discretionary dollar market, you're really limited. So I could either sell tourist items, work in a bar or restaurant, or I could sell real estate. And so I went with the real estate aspect. And my first year, it was one of those things that everybody hears, do what you love and you will excel. And you'll enjoy every day. And after being a court-appointed receiver in California, after being a Playboy Bunny in California, after publishing a magazine in California, by the time I got here, I'd pretty much done a lot of things, but I really didn't know how to work for anybody. So real estate was perfect. My first year, and this was back, before the crash, I was able to make $100,000 in sales and gross commission income. And I loved it. It was the most natural, effortless business. I understood every piece of it. And 22 years later, I own 3 offices with 45 agents. And I myself have flipped 7 homes in the last 5 years because one of the things that I've discovered as an agent is that I have a lot of investors that come to me and they're all making money off of my knowledge bank. And I thought, why does everybody keep making money off of what it is that I know what to do? Why not do it for myself? And me individually did it by myself. And I have to tell you is it okay if I just tell you what's going on? Or okay,
Yep, yeah, let us know.
My first flip was this $600,000 duplex that I couldn't get anyone to buy. And I kept looking at it. I'm like, I know this is a good project. So I thought, I'm going to undertake this myself, but I didn't have a lot of cash flow. So I went to one of my long-term customers that I had been flipping homes for, only making the commission. And I said, why don't we go in partners on this piece of property? You come up with the down payment, the 20% down payment. I'll get the owner to carry it for interest only for 2 years. So, and I'll come up with the balance, and it'll give me,
seller financing at the first deal.
Right?
I love it.
Seller financing. And so my investor who's in Canada put in the 20% down, the 120, and then we financed the 480 with the owner, interest only for 2 years, and it was a duplex. So I always had somebody living in one of the units helping offset that cost. I then had to come up with the other 120, but I had 2 years to do it. I didn't have to come up with it all in one lump sum because I didn't have it. I would have put the 20% down and just moved on about my business. So over the period of 18 months, I had the tenant in there paying. I did 1 unit at a time. I fixed it up. I then took a tenant and I put a new tenant in the other side for more money and got rid of the tenant that wasn't paying a lot of money. I fixed up that unit, and then we ended up selling it for $1,275,000.
Wow.
So That was my first flip. And I think the most important information that I can give anybody in the real estate investment business. Now, this is different for a builder or a developer. You know, they have their own formula. Or for an individual, one of the best things you can do is understand what's happening to that market tomorrow and what's coming in down the pike. Don't look at what it's doing yesterday or last year. You can't. You have to look. You have to go to a knowledgeable agent in the area, and you have to say, where are the homes selling and they're going up in value? Where is the new trend? What do you see happening? Different things. Like, for instance, the city of Delray, where I work out of, is putting in new bike lanes in a certain area. They're putting in electric charging stations. There's a new restaurant, a new hotel going in. I'm like, well, I really don't need I don't need to do a demographic study because I can see that Starbucks has done it for me. That's right.
I love it. I want to unpack this. Let's just go back real quick and just I want to give a summary of how you got started, because it's an awesome story, everything you've said so far. So it sounds like you're out in California, you're with your fiance. You worked in medical sales, as a Playboy Bunny even, and then you came out here to Florida. You guys broke up and you're like, what should I do? And so you decided to jump into real estate. It turned out to be a perfect fit for your career, perfect fit for your personality. I've heard that a lot from other real estate investors and agents. It seems like there does seem to be some kind of personality fit there. So that's great. And then you over the years, you found, you got into your first investment as a duplex, which was seller financed. And that's fantastic. I love hearing that. $600,000, you sold it for over $1 million. And now you are working, so it sounds like 3 offices as an agent. Is that correct?
No, I'm a broker. I own the company.
I mean, broker, sorry.
Yeah, no, I own the company. I started the company myself with $900 because then the crash came after I sold that. And I ended up in a little house. I was able to pay $105,000 for this little house. And the hurricane came. Oh. So now I found myself living in this little house in a neighborhood that I wouldn't necessarily find myself in. Yeah. But I thought, it doesn't cost me anything to live here. The hurricane's here. I'm just going to stay and I'm going to fix up the house. And I had a lot of people that would come by and go, why are you over here? I said, let me ask you a question. Can I pay you $100,000 a year to live in this house? Well, yeah, if you pay me $100,000, I'll live there. I'm like, I'm going to sell this house for $200,000 more than I paid for it within 18 months. Oh, I'm like, yeah. Yeah, and that's what I did. I bought it for $185 or $105. I put $80 into it, and I sold it for $360. And so I got paid to live in that house while I was. I mean, I'm lucky. I don't have kids. I just have big dogs. But you really have to. I have a lot of women that are in their mid and late 40s who are divorced. The kids are out of the house, and they're always trying to buy a home. And they don't really quite have enough money to buy a home for the 20% down. They're putting in less, so they're having to pay the PMI. And I'm like, instead of getting everything you want right this minute, why don't we do a little bit of a compromise on a home that maybe doesn't have everything you want? And in 2 years or 3 years from now, you have enough equity that you can now go buy another home. And it's so difficult sometimes to get these women to understand that, it's a plan. It's not a forever, it's a 3 to 5 year plan. And I've had to step up. I've gone from one house to the next house, to the next house, to the next house. And now I bought a home over in Boynton Isles because I knew what was happening in Boynton Isles. I knew what was going on in the area. So 2.5 years ago, I bought a 2,700 square foot home for $4.25. It is now appraising at $849, 2.5 years later. Because I knew what was happening with the trend. And that's what you have to do. You make your money when you buy. You don't make your money when you sell. You have to understand and stop nickel and diming these sellers. Oh, I need another $2,000 off. Can you make the spread? And to me, the formula is 30%. Can I make 70%? Can I make 60%? I have to look at it like that. No matter what I put into it, can I make this amount of money on the way out? And now I'm making 60 points on my little house over there because I'm going to wait. And here's the other thing. I can put in a pool for 35. It'll make me 75. So I make $40,000 off my $35,000 investment. So you have to know, absolutely important, who's your end user? who's your end buyer? Who is that person? How much will they pay for the house? Where are they going to get their money from? Can they afford to get the loan? You know, who your end buyer is the most important thing when you're buying an investment property. Who's going to buy it from you? Are they going to be struggling to get the money? Is it in a neighborhood that's going up in value? Is it readily available to the incoming flux of buyers that are coming into to Florida? Who your end buyer is and where they're going to get those funds and what they'll pay for the house. That's the most important thing.
So we do have a lot of new investors watching this show. So I mean, everything you're saying right now is very pertinent to them, especially. So if you can kind of give them a piece of advice, like when somebody's going out to look for an investment property, especially through brokers, through agents, what is the process they should be following? I mean, you're saying that they should be looking into the future. They should be looking at trends. So how do they go about identifying those trends and what's the steps that they should be taking to find this 30% margin property that you're talking about?
Well, the way that I do it, because I do it for myself as well, so it's easy to tell them how to get that done, is, for instance, I'm looking for homes in Jackson Hole, Wyoming right now. So what I'm doing is I'm pulling it up on all the different platforms, and I'm looking at what the recent sales were in the area. And then I'm looking to see what I can afford in the area. It's the same thing. What happens with a buyer or an investor comes to my office now, I'll listen to what it is they're looking for. I'll understand how much cash flow they have, what the timeline is, how quickly they need to move it. A lot of them will borrow money from someone else to do it, and then that has squeezed down their profits. If you could go to a FSBO, and one of the things I've done with the FSBO too, and this, I know I'm going off track, but one of the things I've done with the FSBO, because I've done this as well, because I had no money, right? I had to figure out what the hell to do. I went to a for sale by owner. I knew the house would appraise at $450,000. I offered the for sale by owner $400,000 with a $50,000 bonus coming back. So when I bought the house, I had $50,000 in my bank account to do my carrying costs.
Interesting. I've
Yeah.
never heard of that. That's
absolutely.
That's a very
Go
interesting
to for sale by owner. Find out what that house will appraise for by doing all the comps in the area, and know that the comps in the area are going up in value. Prices are going up. Like right now, we're seeing 14 offers on a house in one day. We're seeing them go over ask. So now it's easy. If I see another house in the neighborhood come up that's under what I know, that I'm like, well, let's grab it, because I already know what's happening in that neighborhood. So you can do that with a for sale by owner.
For FSBOs, so do you look, you pull your comps, you try to figure out, where the market is right now. Do you, when you look at the FSBO property, do you also pull up their mortgages to make sure that, because it sounds like you're trying to grab the equity at the front end and then giving it to them, at the back end once it's appraised? And so do you go through and pull up their mortgages to make sure that they don't have a high balance, or how does that work?
Not my business. My business is, what will the house appraise for? The house will appraise for $475,000. I'm going to offer them $400,000. That's okay. It. If you can't take the $400,000 or the $425,000, I need to walk with $50,000 in my hand that year, because I needed something to do my carry for a year. I needed to make sure I had the cash flow. I just put in the bank, I do automatic payments, and I don't have to worry about the payment. I just have to worry about what I need to do to put into the house. And I ended up making money on the house. I ended up selling the house, making money. But it's on the FSBOs that I guess maybe the answer to that question is the FSBOs that I look for, and for everybody, those are for sale by owners, just in case people don't know that. I don't look for short sales. I don't look for REOs. There's so much work, and typically if here's a key statement. If there's a short sale or an REO and that bad boy is sitting there on the bank's books, that means it hasn't sold. Okay, that means that in that neighborhood, nobody came along and bought it before it went into a short sale or before it went into foreclosure. There's no money to be made there. If it is, you're going to be squeezing it out. You're going to be squeezing it out, because they could have sold it and walked with a little bit of money instead of having a short sale. The fact that it had a short sale tells me that all the comps in the area will support the bank accepting less. If the bank is not willing to accept less, that means the comps in the area say it's worth more money. Why are we buying something that the bank is willing to take less money on? Everyone thinks, oh, it's so cheap and makes some money. Don't do that. I like to buy the $400,000 home in the $800,000 neighborhood. That's the simplest formula that there is. So, you know, the best thing to do is I like to stock neighborhoods. So what I'll do is I love stalking neighborhoods. I'll like drive around neighborhoods, areas. Like I just went into Lantana the other day. I'm like, well, I've never seen this neighborhood before. I've been doing 22 years. How can this be? And on my phone, there's an app that you can open up and see what's available in the neighborhood and what has sold and what's pending. So now if you know, even when I buy or even when I take my buyers out, I pull up the property appraisers map and I click on all the neighbors' homes. This one sold for 500, this one sold for 600, this one sold for 400, this one is asking 7. That's a bad deal. This one's asking 2. Okay, is everybody around it selling for 4 and 5? Okay, we can do that at 2 or 3 or even the high 3s. You know, by knowing what everybody else's business is and what they paid for that house allows you to understand who your end user is, who's your buyer, and how much they'll pay for that house. And remember, what people are paying and selling it for today is not 6 months from now. And I'll give you for instance on that. I went in and had in November, when the interest rates went down, I had one of my houses refinanced, and it came in like 649, 679. I had it reappraised about maybe 40 days ago after COVID, and because the interest rates were like at 2.9, 3.1 or something like that. Let me go see what it's coming in at. It came in $200,000 higher in today's market.
I love it.
So when you're buying, Sammy the Stonecutter is not there with the price. Okay. And most areas, especially Florida, now it's a little different with the COVID and the tax implications and, the cold and people moving quickly here and states fleeing. But in general, there's a cyclical buy cycle, right? In areas where you have schools and kids, it'll be August, end of July, August, they got to hurry up and get their kids into school. So you see a lot of sales then. I find that in September, October, November, it's a little slow for us. And then it picks up again in December, January, when people are down here for the winter. So for me, there's the cyclical. And I think a lot of people...
And that goes back to knowing your market. I mean, you've said so many times that you really have to know the area that you're working in. You have to know, the neighborhoods themselves. And we get a lot of people who ask about out-of-state investing, and one of the big caveats for something like that is that you don't know the neighborhood. And so, I mean, everything that you're saying, it sounds like it ties back into really knowing both the end buyer who's going to be buying it, which really ties into you have to know where you're buying. You have to know the neighborhood itself in order to know what's an actual deal.
Every agent, every real estate agent, I tell them the most important thing is to know your inventory and know who the players are. Who are the builders? Who are the developers? What's going on in that neighborhood? And follow the Starbucks. I mean, that's a simple map. Follow the Starbucks,
and
right?
The Walmarts.
And because they've done demographic studies, and if there's a Starbucks going in, you better get your little fanny over there and buy a house in that neighborhood.
I love that advice because I think it's very important. We use that. We also invest in mobile home parks, and so we use the Walmart. We use the Walmart formula is what we call it. If there's a Walmart within 10 miles of the mobile home park, we basically say, okay, due diligence done. Not really, but
those are your people though.
Yeah,
right?
Exactly. Yep.
Yeah, those are your people.
So,
those are your buyers.
So follow the corporations who, I mean, they have so much money. Their due diligence is much better than anything we could possibly do. So I love that you said that because it's absolutely true.
Yeah, absolutely true. Oh, bless you. You really need to see, at my age now, I mean, I've had so many professions. And again, this is my favorite. People say, well, why don't you move to like La Jolla or the Hamptons where you can make some really good money? And I can't afford to relearn the inventory. I don't have the time. It's taken me 20 years to know the inventory.
And that's why you should go to an agent or a broker. That's why it helps for investors to go to agents and brokers, is because they know the market better than you could ever possibly know the market. I work with brokers myself, and so I know that it is it's a very important thing to have in your back pocket. It's a great player member to have on your team because they know, like yourself, they know the inventory, they know the market better than anybody else. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
And if they're good agents, they stand behind what they've done. So agents are here to advise and negotiate for you. They're not here to make your decision. They're not here to argue with anybody. They're here to advise and negotiate. Now, I had a buyer. This is great today because I had a buyer yesterday that was buying a home. It was $500,000. They went in, they bought it. I did not like the home. I don't like the house because I don't want to get stuck with that house 3 years from now when they go to buy it. I'm going to get stuck with that house. I said, I don't like the house. I'm not going to be able to sell this house. You're going to be putting money into it for the next 3 years and you're not going to get anything out of it. You're going to get exactly what you put into it. Can I please show you some other homes? Please show you. Well, he really loves the water. I said, I'm telling you now, I don't like the house. And so because I'm responsible 3 years from now and they're going to go, why'd you sell me this house? And I'm like, so I actually got them out of the house and got them into something else at $650. Okay. In a house that I know that'll be worth $799 in 3 years, and he doesn't have to do anything to it. So for all of those people that are making those $2,000 or $3,000 house payments, including taxes and insurance and all the other things, every time you make a payment, if every time you put $2,000 into something monthly, you should be getting something back for that $2,000. I don't care if it's I love my home though, and I just really want. It doesn't matter. You're putting $2,000 a month into something. At the end of your tenure of doing that, you should have more than $2,000 a month coming back to you. I mean, don't.
Makes sense.
But I love it. Okay, I'm happy for you, but you need to surround yourself with good neighbors who bring up the value of your neighborhood, neighbors who are buying their homes, not living on credit all the time, because that's where you're vulnerable to recession and downturns in the market. When you have 90% of my deals are cash, when you have strong 25, 30% down neighbors, people that aren't overextending themselves, that protects your investment. That protects your home. Look at the cars in the neighborhood. Look at what the neighborhood's selling for. Understand if there's a new neighborhood coming in next door, that's going to put this one to shame. Maybe we might not want to do that, So it's all about the trends, the neighborhood, the most importantly, you make your money when you buy, and who your end user is. Who are you going to sell your investment to? And you've got to make at least $50,000 on every investment, or it's not worth your time. Take your time to find the right project. It will set the pace for every project in the future for yourself.
Perfect. I love it. And, with that, I'm going to move us on because that is the perfect summary. I mean, you could possibly give, so far, everything up to this point. I mean, it's solid advice. Take the time because really, I mean, you can't afford to make bad decisions, and it does not make sense to invest in something that's not going to be giving you a return. So with that, this is a 25-minute episode. And so I do need to move it along just a little bit.
Sure.
So I want to jump into your specific experiences here. We all know real estate, it's a roller coaster. You got your ups, you got your downs, both emotionally and physically. So kind of take us to one of the times, you've had a more than 20-year span in real estate as a real estate broker agent. So you've got a lot of experience. So take us to one of the times where, you kind of hit the bottom of the trough, and tell us, what was the biggest lesson that you pulled from that experience?
I'm going to tell you the biggest lesson I think every investor should pull from the experience is don't pay too much for your money, number one. And even though they tell you use everybody else's money, there's a way to use your own, especially when you have seller financing. So don't always try to give your money away. But the biggest lesson I learned was the first 2 flips. I got taken advantage of by the contractors. I didn't understand the value. I didn't shop it. I was so anxious to move along. And one of the things that I want to say to everybody out there that's investing, I don't care how long you've known that person. Don't use your friends or family. You always compromise yourself because you don't want to be the bad guy. And you always compromise your dollars. It's a business. This isn't a family or friend get together. This is a business. Use people you don't know that have been referred to you by other flippers or contractors. And once you get your team together, you take care of that team. You make sure that that plumber that you're working with or that electrician you're working with, if you can give them to other people while you don't have a project available, keep those people working. Give them to your customers, give them to your friends, give them to your other contractors. Separate yourself from your friends and family and become a business owner, and use people that you can call up and you can have stern conversations with that you're unhappy. It's difficult when they're your friends. And then of course you become, the negative Nelly in the situation, and you don't want that. You want a respected business relationship. And so my biggest mistake was my first 2. I made the mistake because my contractors charged me way too much. And as I got more experience, I understood, and it took me 10 years to put together a team. I have my electrician, I have my plumber, I have my landscaper, I have my painter, I have my contractor. And those are my guys every single time. And I give them here's the thing. People don't want to share their contractors. You share them with just a few people, and when you call, they get on the phone and they show up because they appreciate all the business that you've given to them. I've had so many of them thank me during the holidays. You have brought food to the table of my family. You have helped me excel my business. So when I call them, they come and take care of it for me, because my goal is to keep everybody working and making money. And when you get a good team around you, it makes you know what to expect. They're not pointing the finger like the first 2. Well, that's because the plumber did this, or that's because the electrician did that. I'm like, what the hell? So once you get people that have accountability and have good work ethic, don't let them get away, and take care of them at the holidays. When the holidays come, you take care of them. I always make sure, because I'm also a businesswoman, I give them like a $250 gift certificate to Home Depot because I want them to have better tools when they work.
I love it.
I give them where they need to spend it, and also makes it better for me. So I make sure I take care of my contractors at the end of the year, my cleaning crew, my lawn people. Because when I have customers or I have a piece of property, like if I have something being shown and I know I got to get it on, I'll call my landscaper. Listen, I need it done tomorrow. I need it done before Saturday. And they'll get out there and do it. So the worst situation I ever was in was having contractors I couldn't trust with my money. And I had them spend money that didn't belong to me. Well, this was happening, so I thought I'd go ahead and open up I said, how was it that you made a decision what was coming out of my wallet? Who are you to make that decision? And then you're the bad guy. So you get your team together and you take care of your team. You make sure, like during the COVID, during the hurricanes, those are the people you reach out to. Or do you need anything? I dropped off food. I had food made, and I dropped off food to my contractors and my cleaning people and stuff. I dropped it off at their homes. I made that effort, because when it really comes down to it, it's great making money and I love what I'm doing, but I also love the people that I surround myself with that help me get to those points of success.
I love it. Yep. And everything you just said is I've experienced it myself. It is pure wisdom. Take care of the people that are on your team. Like a good contractor is worth his weight in gold. You're going to go through quite a few contractors that, well, hopefully you don't have to, but most likely you're going to hit 1 or 2 contractors that aren't, that aren't going to be, long-term on your team. But once you find that person who's reliable and who does quality work, really take care of them. It sounds like you're taking care of them above and beyond. You're giving them gifts, reaching out to them on holidays. I love hearing that. That's what keeps a team together. And then the other piece of advice you gave was don't work with friends and family, which is also another great piece of advice, because as much as you like people, it is difficult to establish those boundaries and then maintain it in the business relationship. And so I think that is also really good advice. Just don't do it. Just don't work with friends and family.
Don't go there. Yeah, don't go there. Yeah.
All right. I'm going to move us on one more time. This time I want to hear just a little bit more about, how you work individually. We all have those things that we do that kind of, defines our success. So if you could, pinpoint one thing that you do that really defines all the success that you've had so far, what would that habit be?
I get up on Saturday mornings and Sunday mornings with my cup of coffee and my baseball cap, and I drive neighborhoods. I watch sales. I have it set up automatically for myself, and anyone who has a real estate agent, they should set them up. You isolate 4 or 5 neighborhoods that you're watching. You watch, you don't just, you don't want to back yourself in a corner. You want to have about 4 or 5 neighborhoods that you're watching. And you set those up on searches every day. And every day, those results of any type of change in that neighborhood on a listing or a home for sale, if anything like that comes up, you get notified. So I identify 4 or 5 neighborhoods, and then what I do is every weekend I drive those neighborhoods. I get up in the morning. I love yard sales, because those people know everything in that neighborhood, and they're going to know way more than you'll ever know, right? So I love putting on my baseball cap, got my coffee, I'm driving around, I stop at yard sales. How's it going today? What's happening in the neighborhood? Are you moving? Who's having a yard sale? Typically someone's going to be moving, right? So you want to kind of watch for that. I also drive and see whose lawn hasn't been mowed for a year. I look at people whose shutters have been up for 8 months. And I'm like, that house is going. This house is going. And I identify 4 or 5 neighborhoods. I keep my reports on them, and then I drive them every weekend looking for an opportunity. And I go up and knock on doors. And I go back to the county appraisers and I look who people are up, and I try to get a hold of them. Like, hey, I noticed that, nobody's been in your home. Are you thinking about selling it? Because if I can save them the commission by putting the deal together, that's what I want to do. I don't advise buyers who aren't licensed agents to do that. Get an agent on your team that will make the money on the sale. So maybe you get them to take a point or 2 off when they put the deal together, because you found it. You just need them to protect your butt when you put your contract together, right? You need to make sure everything is there. And then you give them the listing when you go to sell. That encourages them on a couple of numbers. One, helping make sure you get the right price on the purchase, protecting you on that purchase. You're going to reward them when you go to sell. So now they've helped you make the right decision. So if you can't sell the house, they're the ones that are going to get punished because they're not going to make any money. And then what does that really do? It encourages them to find more deals for you. Now you have a little bird dog out there working just for you. And don't try to squeeze a nickel or dime out of them. Reward them for their efforts, and you'll get rewarded for believing in them and investing in the properties. So find yourself an agent, have them set you up on 4 or 5 neighborhoods that you like, have them advise you which neighborhoods. You go out and you drive the neighborhoods. If you find something, have them help you write it up and put it together. And then you give them the listing when you go to get rid of it. Don't worry about that. And then they'll go find more projects for you. Yep. And you want someone helping you that's in the business. You then have to look at the house, have some knowledge, right? And you have to look at the house and go, okay, this is a 2-bedroom, 2-bath, 3 bedrooms are selling for this. Can't I get another bedroom in here? Where can I put it? What needs to be done? Okay, the roof needs to be done. It really should have a pool. There's no garage. Okay, well, maybe this isn't the right project. Let me go here. When I look at a house, because I have so much experience now, I look at it for my investors. I can tell you right off the bat, okay, this is what needs to be done. This is what you need to do to sell it in this neighborhood. I have to tell them this has to be a 3-bedroom, 2.5 bath. That's the only thing that's going to sell in this neighborhood. So you have to have someone who can advise you looking at a house and understanding what needs to be done to it. That'll come from experience with you, but it's best if you have the same team over and over again, the same agent over and over again. So when you're communicating, the communication is effective, and you have expectations of them and they have expectations of you, and they're met each time. But you really have to know when you look at it. I can look at a house right off the bat and tell you exactly what needs to be done to that house and what the return will be, because I've done it for so long. And so that's what I do daily. I've chosen to. I already have 2 neighborhoods, by the way, for my new investment. And I drive it all the time. I watch what's going on in the market, how quickly it sells. You know, if it takes forever for something to sell, then maybe I need to kind of look at the other 3 neighborhoods that I've picked. You know what I mean?
Awesome.
So watch the neighborhood, drive the neighborhood, see who's out at 6 o'clock at night, who's there on the weekends. If everyone's parking on their lawn, probably not a good neighborhood, you know, but you won't see that when you're just looking online. You never see that.
Yep. All right. So we're on to the last question. In one sentence, if you could give, you know, the Jerilyn 20 years ago, one piece of advice, what would that piece of advice be?
You should have done it sooner.
That's funny. Multiple people have said that. I love that. That's great. And so for everybody thinking about getting started in real estate investing, take that piece of advice, get started today. Go find yourself a broker, find some neighborhoods that you want to invest in, start driving around just like Jerilyn does. And, you know, eventually something is going to work out. All right, Jerilyn, I really appreciate having you on. I know I can speak for everybody listening and watching that we appreciate all the wisdom that you shared with us today. If, you know, we all need to receive things, you've given us a lot today. So if somebody brought you something, what would you want them to bring you?
I would like someone to bring me opportunity, insight to new areas that maybe I haven't been to. I would love for somebody to call me up and say, hey, I'm in Peoria. I don't know. What can you do for me? I would then hunt down a good agent for them. They might have 2 or 3 that are in the neighborhood, but I love what I do, and I love to see people succeed in that. And I would give them maybe 10 little steps of doing it. You know, go find an agent who's already doing it for somebody else. They always need more and more, because each agent needs about 5 or 10 investors like that, because that's where they make their money. And either they're an investment agent or they're not an investment agent. You know, you can't, the luxury sales agents and the multifamilies, they're not the same as the meat and potato guys with their feet on the ground. So if someone could bring me something, is just opportunity to help them invest. I mean, I'm always looking for another investor. And I know a lot of agents that focus their business on that are also looking for that. And I want to tell you, thank you so much for asking me, because like I said earlier, I've been wanting to get this off my chest, because I see so many people where the agent sells them a house and then the agent disappears. And I'm like, that is so not right, you know? So thank you for that. And I hope that the investors get out there. I love real estate. I think it's one of the best investments you can make. I don't have any money in the stock market. I don't understand the stock market. I'm going to invest in what I know, and what I know is real estate. And I hope that you are successful and really know you make your money when you buy, take your time to invest, try to use money that's not going to cost you a lot of money, and try to understand who your end buyer is. Those are the key points in my investments for myself.
Beautiful. I love it. And again, thank you for coming on today. If somebody did want to get in contact with you, what would be the best way for them to do that?
They could go right to my website, poshflorida.com. My company is called Posh Realty, Posh Properties. We're in Delray Beach and Ocean Ridge and Boynton. But my website is poshflorida.com, spelled out, Florida spelled out.
Perfect. All right. So you guys heard it. If you want to get in contact with Jerilyn, go to poshflorida.com, spelled out, or I will put her LinkedIn profile in the show notes. Other than that, again, thank you, Jerilyn. We appreciate all the wisdom. And for everybody listening and watching, we will see you guys on the next episode.
Thank you.
Thank you for joining us on the Real Estate Investing Club. If you feel we provided value, we would appreciate it if you hit that thumbs up, share it with your friends online, whatever it may be. If you'd like to share or partner with us on an investment deal, we are always looking for quality projects. go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.